This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Blockbuster takeovers by oil and gas majors pushed the value of U.S. energy dealmaking last year to a record $192 billion. More than triple the amount in 2022, according to data from analytics firms Enverus on Tuesday. Acquisitions in the Permian Shale Basin straddling West Texas and New Mexico, the largest U.S. oil field, soared in the last 2 years as oil prices jumped on strong demand after Russia's invasion of Ukraine and producers sought producing wells to guarantee future supplies. 3 pending deals: ExxonMobil's offer for Pioneer Natural Resources, Chevron's bid for Hess and Occidental Petroleum's for Crown Rock, drove fourth-quarter deal values to $144 billion, a record level for any quarter and year.
Norway's natural gas output rose in December to an all-time high, beating an official forecast, while crude oil production was also above expectations. Data from the Norwegian Offshore Directorate, NOD, showed on Tuesday. The Nordic country's gas output declined in the middle of 2023 amid extensive repair work at offshore fields and onshore terminals, but the extra maintenance effort ultimately boosted capacity, officials have said. Natural gas production in December rose to 379 million cubic meters per day, MCM per day, from 365 MCM per day a month before, and exceeded a forecast of 352.1 MCM per day by 7.7%, the regulator said on its website.
Moving on to the top news in the energy sector.
U.S. oil refiners have asked President Joe Biden's administration to reform the renewable fuel credit program by restricting who can participate, claiming the current trading environment allows market manipulation and raises fuel costs. Coffeyville Resources Refining and Marketing and Wynwood Refining Company, both subsidiaries of CVR Energy, said in a petition dated December 28 that such an adjustment to the program could reduce the price of the renewable fuel credits, known as RINs, and would lower the cost of fuel for U.S. motorists. The Environmental Protection Agency, EPA, which administers the U.S. Renewable Fuel Standard, did not immediately comment on the petition.
The European Union's use of fossil fuels for energy would drop 80% by 2040, compared with 1990 levels. If the bloc moves ahead with a target to cut net greenhouse gas emissions by 90% by that date, a draft document showed on Tuesday. The European Union is drafting its first 2040 climate target, to bridge the gap between its existing goals to cut net emissions 55% by 2030 and reach net zero emissions by 2050. The European Commission will present its first recommendation for the 2040 target next month, and is set to endorse a 90% emissions reduction by 2040, from 1990 levels, Reuters previously reported. Next, we have the top news in metal markets. Aluminium prices edged higher on Wednesday as concerns over supply tightness surfaced after traders assessed risks of potential EU sanctions on metal from Russia, one of the world's biggest suppliers. 3-month aluminium on the London Metal Exchange was up 0.1% at $2,230.50 per metric ton, as of 0232 GMT. While the most traded March aluminium contract on the Shanghai Futures Exchange rose 1.5% to 18,925 yuan, $2,638 a ton. The metal used in construction, transport and packaging rose after Poland and the Baltic states called for the European Union to ban imports of Russian aluminium and liquefied natural gas over Moscow's invasion of Ukraine.
Iron ore futures prices were range-bound on Wednesday, with the Dalian benchmark extending gains to a second session and Singapore prices drifting lower as traders awaited details of stimulus measures from top consumer China. The most traded May iron ore contract on China's Dalian Commodity Exchange, DCE, was up 0.62% at 968 yuan, $134.97, a metric ton, as of 0211 GMT. Beijing said that it would take more forceful and effective measures to stabilize market confidence, lifting sentiment in the stock and commodities markets on Tuesday.
We will now look at the top news in the agricultural sector.
India's sunflower oil imports are set to decline in coming months as a rally in prices, driven by a surge in freight rates, is prompting buyers to shift to rival vegetable oils available at a discount, traders told Reuters. The world's biggest sunflower oil buyer typically sources most of its imports from the Black Sea region via the Red Sea. However, recent Houthi attacks have compelled shipping companies to reroute trade between Europe and Asia around Africa, increasing time and costs. The elevated freight rates have lifted the landed cost of sunflower oil above that of soy oil in India for the first time in nearly a year, said Sandeep Bajoria, CEO of Sunvan Group, a vegetable oil brokerage.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.